It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, you and I are going to be spending some more time together. It's Tyrone Jackson, the wealthy investor, and welcome back to Trading Stocks Made Easy. And you know, one of the things about this show that I really love is I have the opportunity to spend a little time with you in your week, in your day, to talk to you about the stock market, investing, what it means, and a little bit about the Wealthy Investor Program. You know, essentially what I teach people how to do is start generating wealth and residual income. And we do that first through covered call writing. Now, some of you have been listening to the show for a while. You know, there's basically three types of covered calls, and that means buying a stock and selling an option to someone else. And we have three different types of covered calls that we utilize based on market conditions. One is an out of the money call, which means we're going to sell the stock at a higher price. One is the at the money call. We're going to buy the stock, sell it, and take in that guaranteed income. And for something called downside protection, we use something called the in the money covered call. And if we're going to borrow our broker's money to do that, to buy shares, we're usually going to really focus on selling the in the money call. Now, what's so great about covered call writing and what's so great about the stock market, which is what you really need to learn, is that everyone who is a billionaire is eventually associated with stocks. But a lot of people who get started investing actually get started through real estate. The reason for that is really simple, because on late night TV, that's what we see. We see ads for, hey, buy one house and rent it out. And it's something that most people identify with, this concept of I'm going to own a piece of real estate, rent it out to someone else, or eventually flip a house or fix it, and that kind of stuff. Now, I'm just going to tell you right now, I have no natural penchant for, putting in windows and measuring. At my house, I always say everything looks really good if you hold your head to the side, because it's all unlevel and it's people come over and they go, this house is really nice. Hey, did you hang that up? Yeah. How could you tell? Oh, just a feeling. So that's, I don't have that skill, but I also got started in real estate and then realized that I didn't like going to court and having to evict people. I remember I had one particular tenant, and she had twins, and she had a 5-year-old, and she opted to buy Christmas presents instead of paying her rent. And so that meant that she was behind in her rent. And by the time March came around, I had to evict her. Do you know how terrible it feels to go before a judge and say, this woman got toys for her kids, but she didn't pay me. Therefore, Your Honor, I'd like to evict her. Well, that's a terrible feeling, but I never have that feeling when I buy and sell a stock online, because there's no one to actually evict if a trade goes wrong. Well, today we're going to talk to one of my favorite students, Mr. Christopher Haru, who also has experience in real estate, but also has really taken a strong liking to the stock market. So when I come back, he's going to be our special guest. And for those of you who are wondering what the differences are experientially between investing in real estate and the stock market, well, that's what today's show's all about. Back with more Trading Stocks Made Easy right after this.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products, and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy-to-follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
Wealthy Investor, Wealthy Investor, wealthyinvestorradio.com.
And we're back. And as promised, guess who's joining me? One of my favorite students on the West Coast, Christopher Haru. Good evening.
Good evening, Tyrone.
Thank you for being here.
Thank you for asking me.
Now, I'm excited because we were talking about before we went in the studio, you actually listen to this show.
I do. I've been listening since you've told me about it.
And did you know that the Pope listens to?
I was not aware of that.
No, I don't know if he actually listens. I'm just trying to like beef up the show, give us a little bit more credibility. If they have iTunes at the Vatican, we should be on the list. That's all I'm saying.
We should be.
Can
At
the
the
Pope?
top.
I don't even know if the Pope can own stock, actually.
I don't think he needs the funds.
No, right? That's true. He's probably doing okay, right? All right, let's focus on you. Tell our audience a little bit about your background and where you grew up.
So I'm born and raised here in Los Angeles, California. A Southern California boy. Never realized how good my weather was until I traveled the United States. And I couldn't figure out when I got off the plane in Scranton, Pennsylvania in September in shorts and a T-shirt that I should have brought a jacket and gloves.
Right.
So I had to go buy them.
Okay.
So I've been blessed with where I live and my weather. I just love LA.
Now, you grew up here in Los Angeles, and did you say your father worked for Boeing?
When he joined, it was North American Aviation. Then it became Rockwell, and then Boeing bought out Rockwell. So he was there for over 48 years at the same company, received a great pension.
Right, which these days, if you make it 48 months without having to think about working for another company, sign of the times. And you grew up thinking about money, investing. For most people, it happens around 12, 13 when you want to start buying stuff. When did that consciousness happen for you?
It was probably a little earlier. My uncle owned a restaurant in L.A., and so I would go help him in the summer, stay with him for 2 weeks, wash dishes, do whatever I can, just to make an extra buck or two, because in my era, Tyrone, we didn't have video game consoles. If I wanted to play a video game, I had to get a quarter and put it in the pinball machine.
Right.
And quarters don't grow on trees.
Right.
So I had to go figure out some way to make money to play my video games.
And which is a form of entrepreneurship. So did you have a paper route or what'd you do?
I mowed lawns. I must have had at my peak 8 lawns around my house. You would see me pushing my lawnmower up and down the street in the summer.
Okay. And how much money would you say you took in each week around?
Maybe $20, $30 at the most.
Wow, very
good. But it was
good.
$5 a yard times 5 yards, 25.
Right. And somewhere along the line, and this is what I love about actually having you, because people always say you always have your students on the show. Why? You are an accountant.
Correct. I'm a CPA.
You're a CPA by profession.
Yes, sir.
Okay. So let's talk about your history in investing, because I think you started out as a real estate investor first, or had you tried the stock market?
Well, I tried the stock market before that thing we call the .com era. I did buy some stocks. I've always saw the beauty of volatility trading, but I never had the capital or the patience to do it. I tried buying options on my own in this little company called AOL. At the time, it was literally 1 or 2 months before the market imploded, and I lost all my money and said, I'll never do that again. Was not happy.
Now, did you own real estate at that time?
At that time, I did. I owned a rental property and my own house. So when I got started, I ended up buying 2 houses on a lot. And I bought the ugliest house because I listened to those late night seminars. Carlton Sheets comes to my mind. I listened to those and I bought the ugliest house. I did the fixing up with my friend's help. Lived in the back house and rented out the front one. That's how I got started in real estate.
Now, did you have those skills? Did you know how to put in windows and polish things?
No, but I had friends who were in construction. And so they helped me tremendously. And my father, he helped me a lot. We had to put in windows. We ended up doing carpet and vinyl and painting it. And it was all just sweat equity. They helped me a lot.
Now, during that time, was there like a Home Depot? Because now you could basically just go get everything at Home Depot and they just come in and put it in.
It was still Home Depot, and Lowe's wasn't around yet, but it was Home Depot.
Okay. And your goal when you bought that first house and you decided you were going to rent it out was to have 10 houses at the time?
Actually, it was 20.
20 houses.
I wanted to get up to 20 rental properties so I could sell half and have at least $1,000 a month coming in residual income on 10 houses. So if I wanted to work, it's not because I had to, it's because I wanted to.
Okay. Now, here in most people know I live half in Los Angeles and half in New York. It's not cheap to buy a house here.
No, and so I went out and studied, and I started purchasing rental properties out of state. So my first rental property was in Boise, Idaho. I had some in Jacksonville, North Carolina, Fayetteville, North Carolina. And my philosophy was if I buy one house here in LA for $500,000, and for some reason she goes and buys Christmas presents instead of paying me rent,
Yes.
that mortgage payment on a $500,000 house would hurt me. It would bankrupt me. But if I could go out of state and buy 5 $100,000 houses, the odds of all of them being unrented at the same time is slim. And the rent would be probably about $500 a month. So I could put that on a credit card. I could find that somewhere. My dilemma with building my portfolio was all the drawbacks that come with it. You have to have good credit. You have to have a big down payment, plus hiring the property managers. So there was a lot of negatives with it, but in the long run, I felt it would benefit me and my family.
And the property management, because I've had my share of property management companies, and then people who call themselves property managers. This month, I'm going to be a property manager. 6 months, they're like, I don't want to do this anymore because they get all the headaches. It's not easy market to go out and find someone who's reliable like that.
No, we had a property manager in the Charlotte area, been managing the property for about 2 years, but every month it seemed to have a repair bill, and they get a 10% upcharge. So I would call and complain, and they'd say, no, it's legit. Well, can you go look at the property? Because if there's all these repairs, they're not taking care of it. But experience is the best teacher, and I've learned when that starts happening, it's time to get a new property manager. But it's hard to do that when they're on the East Coast and I'm here in LA. But I called my real estate agent and found a different property manager, and lo and behold, the last 3 months, I got all my rent. No repairs. So you still, even though I'm not physically there, it's my money.
Yes.
No one's going to manage it. I still have to be on the lookout to protect my interest.
Which is interesting because I had one property. Actually, I had multiple properties, and I thought once I find the right property manager, just assign them to all. But then you wind up making a decision like this one needs a refrigerator and that one doesn't, and someone gets a call, and the water is like the biggest thing because you got to take care of the water, right? So if there's a leak or a pipe burst or something, and so I wind up deciding who gets a new refrigerator this month and who doesn't, and the property manager says, well, we can get you, why get a brand new refrigerator? I know this place where you can get this whole thing. So I used to say to my property manager, you have your hand in my cash register. And whether I pay that mortgage on time, it's contingent upon you collecting the money.
Correct.
And I just didn't like people that much to have to be arguing with the property manager all the time once you even have a system in place. Did you find the same thing?
I did. And right now my issue is the air conditioner went out. It's going out. And I've known about this for 5 years, but it's cash flow. So I told them, fix it and let's see what happens. Because if I don't have to buy it today, we'll buy it in the future.
Right.
Well, guess what? 5 years has come and I just got a bill for $4,700.
Wow. And
I was going to be smart and studious and start saving aside that money, but life got in the way.
Yes.
My stock trading got in the way. So needless to say, I told my property manager to withhold $300 from my rent check, escrow that, and when in about 4 or 5 months, when summer comes around, we'll buy a new one, and I won't have to come up with all of those funds at once.
That's correct, because there's only so much duct tape you can put.
And so much Freon.
Right, exactly. All right, so now let's see if we can kind of catch up to speed, because somewhere along the line, you discover stock market trading and investing. Now, it wasn't with me first, because you had an account. I
do not know who turned me on to covered call writing, but somebody turned me on to covered call writing. And it was just a big, you mean someone's going to pay me to give them my right and I didn't do anything? It was hard to believe. And so I started cover call writing, but I didn't have the discipline that I have now. I didn't have the mindset. My stock would go down. I'm a CPA by trade, so when I see a loss, it's a loss. I don't group them together. I don't look for a net positive as you teach us, just because of I'm a CPA. And eventually, I would quit because I would lose money because the market would go back. My stocks weren't bad usually, but I didn't have the discipline and the patience. And that's one of the key things I've learned with you is to have that patience and that education. And if the market does pull back, I'm okay because I'll still be net positive and I'll do it again next month.
And that's one of the things that I find so amazing is that you're a well-established CPA. And yet you let this guy from the entertainment business teach you how to trade and invest in the stock market. Why is that?
Well, because I'm one of those people who know a little bit about something and I'm always willing to learn. And when I first saw you, it's like, what's in it for him? How can I trust him? I know what he's teaching me. I found that there was enough value in it for me to give this New Yorker a shot. Because I'm not going to make an omelet without breaking eggs.
Right.
So whatever money I invested with you, I know it's investing in me for the long term. And I had nothing to lose. And the reason I had nothing to lose is because my son was starting St. John's University, and that tuition bill is a pain.
Yes.
So I had to do something to start generating residual income to help me finance my son's education.
Yes, and I teach the stock market from a wealth building and residual income point of view. So you remember that $1,000 positive cash flow on the real estate? You can get that from the stock market without air conditioning bills or legal fees, right?
Correct. And the best part is I don't have to do a credit check. I don't have to come up with a 20% down payment. I don't have to worry about insurance. What if a hurricane comes through? What if a flood comes through? I just collect money. I open up my account. Oh, it's down today? Oh, well, close it and go about my day. Open up the next day. Oh, it's up. Okay. Or the most action I usually have to do is, okay, for example, today is Expiration Friday. I have some covered calls expiring today. So they're in the money, so I know they'll be taken away from me, which I'm fine with. So now on Sunday night, I got some homework to do. Where do I want to redeploy my assets on Monday morning to buy and replace these options that expired and I got paid? But that's a lot better than trying to figure out a credit check, making sure I don't spend too much money here. Is the rent coming in tomorrow? Are they getting evicted? So much easier.
Yeah. I mean, I thought it was just me. But, as I go around, now I have some of my friends who love all of that. I have a friend who has like 14 houses, and it just does not bother him. And the stock market does not work for him. But for those of us who have minimal skills and would like to trade from anywhere in the world, have you had that experience yet?
I have. I went to Spain last year, and I had my iPhone, and I had Wi-Fi connection, and it was great being in Spain because they're 9 hours ahead. So the market didn't open till 3 p.m. in the afternoon and close at 10. So here on the West Coast, I have to wake up at 6:30 to look at the market in the morning. There was after my siesta, see what the market's doing. We go out and have dinner and come back and see what the market did and go on to my day. But I was able to do trades in another country and make money.
Now, this is really interesting because when you're married and you start trading, your spouse is kind of in on the act. Because when you have great trading days, you go, you won't believe what I did today. What has your wife's reaction been to all this?
She wants me to open her an account. She keeps waiting for me to transfer enough money so she could get started in her account.
Okay. And does she know about covered calls? What's her
She
extent?
does. She's come to the class a couple times, and I've educated her and my kids on what I'm doing, and they all know. And it's actually funny that you bring this one up. My son Ryan, I took him to class one day, and we had lunch between sessions, and several of the students were so happy that I brought my own son, and their position was, I wish I would have learned what you're learning at age 19 when I was your age, because I would be so far better off than I am now.
Exactly. And the impact that you wind up having on your family because of the success that you're having trading in the stock market is huge, wouldn't you say?
It is, because when I go to Disneyland, we go to Disneyland a lot. I'll buy a popcorn now. I'm not as concerned. It's a $4 popcorn. It's okay. Plus, I own Disney stock, so it comes back to me in dividends. But I buy little things more now because the stock market gave me that extra income to enjoy life.
It's so great what you're saying. I want to talk to you about continue a discussion about stocks versus real estate, but also goals, because you're one of these people who set goals. And that when you set goals in the stock market, you're going to hit them because especially as a covered call writer. So eventually you say, I want $12,000 a month. That is going to happen. You just have to build your account. We're going to talk more about that with Christopher Haru. Don't go anywhere. You don't want to miss what he has to say right after this commercial break.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy-to-follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
Wealthy Investor, Wealthy Investor, wealthyinvestorradio.com.
And welcome back. Yes, please make sure that you visit thewealthyinvestor.net. Sign up for that free newsletter. You want to take an action that's positive? Sign up for my free newsletter, and I'll be sending you articles instantly on what stocks are good in the stock market, what are great strategies you can employ now, how to adjust your thinking so you can manifest more money in your life, more ease and financial abundance by letting your money work for you. My special guest today is Christopher Heroux, who is also a CPA. By the way, what's the name of your website if people want to make sure that you're real?
Well, I have two websites. One is www.harocpa.com. And then I'm building a new website for people who don't want to come to see me personally and do their tax return in the cloud, and it's www.itc1040.com.
Okay, let's say the second one again, because people listening from all over the world. The second website is what?
The second one is www.itc, so in the cloud, 1040.com. And actually, if they go to that website, they'll get a free ebook on how to fix their credit.
Now, let's go back. Now, we were talking about having goals. And as a CPA, you know how numbers line up when you have the right intention. Tell me about your best trade, and then tell me about your goals for what you want to achieve as a stock market trader.
So my best trade probably would have been in my first year would have been Nike. I bought 400 shares, sold a covered call. I was kind of doing weeklies then, but I've gotten away because it takes up too much time. But it would not be called away. It wouldn't be exercise. So I did it again the next week, and I did it again. And when it came down and I finally got my shares exercised, I'd made $2,000 on selling covered calls over 2 months, just doing the same thing over and over. As you tell us in class, it's like washing your hair. Wash, rinse, repeat.
Yes.
And it's that easy.
Yes, it is. Now, a lot of times people come up against their own inner beliefs like, oh, only the rich can be successful. I'm not good at math. I hear that one all the time. What's your response to that?
So I'm good at math. Obviously, I'm an accountant, but you don't have to be good at math. It's just coming in and doing it and learning from your system, being consistent. To me, the hardest part was the emotion. For example, last year, October, the market dropped. And I'm not going to lie, I wasn't happy with it. But I had you in my back pocket, and I was patient. And this past August, when it dropped again, I was just like, oh, okay. I'll make some more money on the way down. I'll make some more money on the way up. Not a big deal. And I just continued on my day. But by being consistent and going with your class for 2 years now, I've gotten that bedrock of that emotion, control of my emotion. That's the hardest part, is your emotion.
And I find that, Michael Jordan, they say, wasn't really a great player until he met Phil Jackson, right? I mean, he was a great player, but I mean, that combination of being able to trade and listen to your coach. A lot of people try to trade and invest on their own. But what's the value of actually studying and, in your case, coming to class every single month?
Well, the market's not static. If it was, the line would be a nice straight line, just going up at a real slow angle, and everyone would make money, 1% a month. But it's not. It's up and down. So coming to class, you teach me what to do when the markets change. So last year, I thought I was a genius. I made a lot of money. This year, not as much. But by coming to your class, you educated me on what's going on, how I could learn that the market changed, how to benefit from it, and how to make it fit my style and change with it. So instead of just doing cover calls out of the money and making more money, you shifted my emotion, my thought process to, okay, the market's changed. We need to be in the money. And I got to tell you this trade real quick. Mm-hmm. My mom's account, I bought 500 shares of Starbucks. I sold a in-the-money covered call. Mm-hmm. It was about $1.50 underwater. Well, no, in the money,
below
I should
strike,
say.
Yeah.
Excuse me. Mm-hmm. I brought in $500. I think it was $2.86. Well, the market dropped right after that. I kept all that $500.
Correct.
The market came back up, and I sold another 86 cents. And I'm going to get out of this trade with a net positive gain of $700 in a month and a half, 2 months.
Yes. Isn't that amazing? And this is in whose account?
My mom's.
Does your mother know what you're doing, really?
No.
Because one of the things I always say to my students is like, help someone. Get this knowledge and help someone who you love. Does she reinvest the call option premiums and cap gains?
I am. I've started building her position in Visa, which I probably might go to Netflix now.
Okay.
But every quarter I send her half of her gain, and she could spend it however she wants, and I keep 50% to grow the account.
Yes. And how does she feel about that?
She just doesn't know. She just knows that money comes in and I get to go shopping.
Right, exactly. My son, the CPA, is doing something right. You know, I love that. That's really important. Back to goals. You have goals for yourself. What's your ultimate goal you'd like to be reaching consistently every single month?
$10,000. Because what my plan is to do is get all of my income that I make in my tax practice, put that in the market, and just take out a monthly draw of $5,000 and learn to live on that. And as my account increases, I can increase my draw, and that way I'm not overspending and I have a nice steady budget. My other goal that I'm proud of is I wanted $800 in dividends this year. I'm at $653. Wow. So I love doing covered calls in between the dividend dates because that's just an extra 20 cents of free money because I have the knowledge to know that I own the shares when they're going to release the dividend.
That is so true. Now, let me just clarify for people who don't understand. There are certain stocks, usually members of the Dow Jones Industrial Average or the S&P 500, that not only pay dividend, but have year-over-year dividend growth. These companies are making so much money. If you just own the shares, your dividend that you're going to be paid, the amount that you're going to be paid on a quarterly basis, these are checks that show up at your home. They go up. Now, my favorite dividend-paying stock over the last 5 years has been AT&T, ticker symbol T. I'm not saying you have to run out and buy the stock right now, but it's 44 cents a share or something like that per quarter. And I have multiple accounts. So when those checks come to my home, it is the easiest money I have ever made in my life. And I'm not taking a lot of risk.
So you've taught us to take our dividend checks, don't put it in your account, and to spend it on something that I would just want to spend it on. So my wife and I are in the process of restoring a 1968 Camaro Supersport, and it is being financed by my dividend checks.
That is correct. And I'll tell you, and this is not anything you're going to find in a stock trading book or any other podcast. There's the psychology of trading, like what makes people successful. And one of the things that I have discovered is for me as well as my students, when you start spending those dividends, there's this real world connection to look at what happened in my life as a result of the stock market. I have one student who buys big screen TVs with her dividends. So every time she's turning on the TV, she's like, that is a stock market TV. So she has a goal, right? Correct. I have found people are very successful. I have another student who buys diamond earrings with her dividends. So every time she puts her earrings on, she's like, these came from the stock market. And my favorite story is a teacher in San Francisco who loves sneakers. And so she buys brand new sneakers with her dividends. So every time she takes a step, she's like, I'm walking on the market. So you have found some value because we take in covered call premiums, reinvest those, but you have found some value in...
Oh, yes. So I prepare tax returns. Majority of them are individuals, but I do businesses. So an average return might be $250 fee or $300 fee revenue for me. When I have a dividend coming in for $100, well, I look at it as that's one less return I have to do. I don't have to maybe work that Sunday. My goal is eventually to not have to work those Sundays. If I need to hire help for my sanity, then I can, because the stock market's going to help me finance that. Or a covered call. If I get a covered call for $300, that's one less return I have to do now.
And this is what I really want people in our audience to understand. The stock market has been around for years and years and years. The internet has made access to it that much better. So really, once you have the financial education, you can essentially set a goal and chart a course and have financial freedom for you and your family, because everybody could use an extra $1,500 a month coming in and never have to repair anything.
Correct.
So you have found value in that.
Oh, yeah. Another one of your lessons you've taught us, don't worry about the stock price. Just buy the shares of a good company that you know the story on. And the company I'm going to talk about is one of your favorites, Visa.
Oh, yeah. Oh,
so
yeah.
I started reluctantly. I bought 5 shares, and I'm thinking in my head, 5 shares, what is that going to do? I'm getting the commission is $10 and I'm only buying 5 shares. It's $200 a share. Well, needless to say, I did this 4 times and built up a position of 20 shares. Those shares have gained in value over $1,000.
That is correct.
Now, I would not have thought that 20 shares would make me $1,000. I was under the philosophy that I got to get in that Microsoft when it's low. I got to get in that penny stock to make real money. No, you don't. You just got to know the story and buy a good stock.
That is so important, and we won't go into the story of Visa, but it is the future, right? Because credit card transactions are not going to go away.
And I just got a dividend from them on the first.
Isn't that great? So it's just really, 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 really terrific once you have that financial education. I'm a huge advocate of using your tax return to invest in the stock market. I would be remiss to have a CPA here and not get your response.
Correct, because most people will overpay the government who holds their money for tax-free and gives it back to them. And majority of my clients, I try to educate them to get their money throughout the year, and they'll sit there and tell me, no, that's my vacation. No, I need that to pay my property taxes. And if instead of them investing it in those things and they were invested in the stock market in themselves and in education on your website, it would come back tenfold versus a one-time use on a vacation.
Exactly, which produces no return. But if they invest that income tax refund and do like you did, guess what? Next year they could use a dividend check. And that's going to keep coming back to fund that vacation.
So one of my clients, he earned his money the old-fashioned way. He inherited it. His dividends annually are about $50,000 a year. So actually I'm going to pin his tax return on my wall because that's my long-term goal, is to get to $50,000 a year in dividends. But he doesn't do anything, and he receives $50,000 a year in dividends. And they're even taxed lower. Mind you, see your professional tax preparer.
We're running out of time here. We got to get you to come back. You know how I feel about a strategy I created called the sweep. And the sweep is, the formula 2 part down, 1 part growth. And it produces 2 things: tax-free income, depending upon the entity structure, or tax-deferred. But it causes your retirement account to have exponential growth. What is your response to the sweep? I've never asked you this before, so go for it.
So I told my friend about the sweep. He's a CPA, and I talked to him about doing this in a Roth IRA. For those of you who don't know, a Roth IRA, you do not get a tax deduction now, but the money grows tax-free, and you're able to take it out later. Again, talk to your professional tax preparer. I have to do my disclaimer.
Of course.
But when I told him, with what I'm learning in your class and keep investing and churning my money, when I'm 59 and a half, I'll be able to take out $10,000 a month tax-free.
Yes.
For the rest of my life.
Yes.
And this is even the better part. It goes to my kids tax-free. So they're going to inherit this money tax-free.
That is correct.
So the benefit is, no, you don't get a tax benefit today, but Einstein said the 7th wonder of the world is compounding interest. You're going to get the 7th wonder of the world, a compounding interest, tax-free for the rest of your life. And I honestly think Congress will eventually close this loophole because they're going to lose too much money.
Yes, I agree. But while it's here, we might as well legally go ahead and take care of that strategy. Now, let me say, you know how I have the formula 2 part down, 1 part growth? You're selling in and out of the money cover calls. You are still getting dividends.
Correct.
And if you choose the 2 Dow stocks as your covered call right, you are getting the call premium in and out of the money plus the dividend. So you're not losing anything. Your money has to grow faster.
So I need to tell you this quick story. So when I talk to my clients or somebody new about your program, I just tell them, you buy 100 shares of a stock and you sell a covered call, you should make 1%. Okay. And in a month, 1%. And that's actually being conservative. So you do it 12 times, that's 12%. Well, then I always play devil's advocate. What if the stock goes down? Okay. So you make 1% for a year while you wait for the stock to come back. But guess what? You're getting 3% on dividends. So I actually made 4% on my money in a year. On my way here, I saw a billboard advertising to lock up my money for 5 years at 1.4%. So I'm going to get 4% the first year and 3% every year after that while I'm waiting 5 years for this stock to come back. I'm still better off than putting it in a CD.
Absolutely. And that's that financial education paying off. And for those of you who say, I don't really understand, this is why the Wealthy Investor Program exists, to educate and inspire people to say, hey, listen, if you just learned a little bit about money and how to handle your retirement account and your cash account and collect dividends, your world would have to change. And the wealthy do it all the time. And Christopher, I say this all the time, no one is locked out of wealth other than just your thinking. So if you reach out and get that financial education, it is powerful. And you are a shining example of that. Any other points that you want to make? Any advice you would give to anybody listening who's saying, this guy can do it. Of course, he's a CPA. I'm not that good with math. You would say what?
Well, as you've taught us, you just need a 4th grade math education to do this. But honestly, it's the fear. Most people are scared of the unknown. And once you open your account, do 100 shares of one company that you know. I could name off Microsoft, Visa, Disney. These are companies that you know are not going to be gone in next week. They're going to be here for a while. And you buy their products. So do a company you like. Again, Microsoft. Their stock isn't expensive. Or actually the one right now that I've been trading a lot in is Starbucks. You could buy 100 shares of Starbucks at today's prices of around $58, so $5,800 to get started. And you could bring in $100 a month. Now, I know people who need medicine and they need $100 would help them buy more medicine. And it doesn't take a lot of money to get started.
That is correct. There are some stocks a little bit cheaper, $35, but they're a little bit higher risk. But right now you are talking about some Dow components, which is great. And I love what you say. Even $100 coming in from the stock market every single month has got to be better than $0 coming in.
Or what's the bank's paying on your savings account? 0.01%?
No, it's absolutely amazing. Hey, listen, we got to go because the music is coming in. That's their way of saying you got to get out of here. Thank you so much for being a part of the program. Will you come back and see us?
Whenever you want me to. I've been waiting for you to ask me to come to this. So I wanted to thank you very much.
Well, thank you. We're going to do a Traders Roundtable where I get a bunch of the students in the studio and we're going to talk about your collective experience. And not only that, and I promise you we're going to do this show, we're going to talk about the objections that you face in the real world, because there's always people going, no, that's not true. You guys
got to pay taxes on it.
Yeah, you got to pay taxes. We have to have more income to pay more income tax.
What I try to tell my clients is I'm happy to pay income tax because I had income. I'd rather pay an income tax than not paying income tax because I made no money.
That's exactly right. If you're living in a garbage can making nothing, there's no income tax. But who wants to do that?
Exactly.
Christopher Haru, thank you so much for being here. This is Tyrone Jackson, Trading Stocks Made Easy. I'll see you on the other side. Make sure you keep a positive mindset and stay open, because you don't know how much wealth is out there with your name on it.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.